Alright guys, so today's session we're going to start off with a quick recap of what's happening with Dogecoin and then go into 7 growth stocks that are also going to pay you monthly dividends. And we all love some dividends, and I love talking about growth stocks. So those are things that are going to be something that are not only going to be amassing you money in one way over time, which is the growth aspect, but then the other way also, 2 different ways where they're going to be paying you dividends literally every month. And if you can amass enough of any of these dividend stocks, then you're pretty good to go. But today we can see it's been a pretty green day, but it's not really a green day, it's more of a recovery day. What's actually happened today is that yesterday everyone sank. So Litecoin and Bitcoin both had a massive dip, right? So if we come back here, we of course can't look at just yesterday, so I'll click on the 1 week, and you can see how sometime around 4 p.m. boom, everything just fell. All right, so Litecoin went down all the way from being above 300, right, to around 250. Huge fall. Same thing with Bitcoin, right? If we go back on the 1 week spread, you can see it was having a pretty stable time, and then apparently a bunch of people liquidated their Bitcoin, which means they sold Bitcoin for whatever reason. And whoever did it must have been pretty influential, like Elon Musk level stuff, or maybe it was even him. I'm not really sure about that aspect. But Bitcoin fell from the 60 mark all the way down to 53. Right? And then ever since then, it's just been coming back upwards, right? So right now it's at 56, as you can see. So it's coming back up to where it was. So basically, as you know, every dip is a buy. So it was a pretty good chance to grab yourself some Bitcoin if you've been trying to get back into it. Unfortunately, I've had all my money moved into whatever I had reserved right now that I could have used to pick up more Bitcoin, I had in Dogecoin, so I couldn't really do anything. I was hoping to get another half of a Bitcoin in, so I would have 2 full Bitcoins, but didn't really get a chance to do that. Dogecoin, on the other hand, doing great, right? So if we look at the past week, right, it's still that same week. This is still that same magical week where it went from being under a dime to reaching a quarter to being almost 50 cents, right? And then it had a little scary moment over the last 24 hours where it was starting to sink back down, came back down to a quarter, but it's holding at a quarter, which is the beauty of this, right? So it's now starting to act like a real stock. It's significant, it's not so imaginary, it's not so trash anymore, and it's actually making people a lot of money. So it's been holding at its quarter. I bought back in at 0.26, right, 80,000 of it, and then ever since then, as you can see today, it's pretty much just been going upwards, right? So it had a dip at some point where it came down to a quarter again, but now it's all the way up to 34 cents. Soon enough, it'll be up 35 cents, and I'll have that 10-cent gain, which will translate into almost $10,000 complete return if we get to that point, right? So right now we're just watching what's happening. It needs to hit 36 cents, 0.366 for a full 10-cent gain on each purchase for me. So, you know, I'm up 6,000 right now. I'm just going to keep, as I said in my previous video, holding this until I see it either reach 50 cents and then maybe dip, or reach $1 and then dip. And I'm looking forward to working this all the way up to $10 by the end of the year. Now, to kick off our conversation, our first growth stock that also pays monthly dividends is ARR. Wonderful stock. So what I like to do when I look at a stock that I'm looking forward to holding for some time to get dividends is to grab a stock that's also still recovering from our pandemic downfall, right? So I click on the 5-year trend now. I used to be clicking on 1 year, but now it's been a little more than a year since the pandemic drop occurred in March, right? March 6th for most of them. So before that period, I like to see where it was at, and you can see it was at the ranging between 16 to 20, right? 16 to 20 being the general range that it was holding throughout 2019, basically. Even before that, it's been worth a lot more. Right now, it's at 12, which means that if you pick this stock up, right? If you pick the stock up, chances are you're going to be, depending on how long you hold it for, you're going to be riding it up back towards that $20 mark. Right, so if we look at how it's been doing over the year, it's been clearly coming back up. It's doing an ECG method of going up and down, all these QRS waves. But generally speaking, it is ultimately growing. Right, this in the 1-year trend has gone back up 44%. So it would have been wonderful if we could have grabbed it at the $7 mark. We either didn't know about stock or didn't have it on our charts. Many of you guys who have been watching from the beginning, I have my charts where I added stuff depending on what I was doing my research on, what I wanted to buy. We had the stocks, and then the ones that pay monthly, and then the REITs, right, the REITs, which I didn't really end up finishing, but this wasn't really on ARR. No, it wasn't really on the list anyway, right? But there's a lot going on with these things, and you want to do your research where you put all the information together. Since I had already finished investing, I didn't really finish the rest of the chart. But this actually is a real estate related Floridian stock, right? So in the 1 year, it's been going up. Now, if we look at it on Yahoo, we can see that they're paying. Let's change this to monthly. They've been paying 10 cents a stock every month, right? 10 cents a stock every month. So this is one of those beautiful stocks that you can pick up as many as possible, and then you would have nice benefit from it. You're going to be getting back a good amount of money. If you own 100 of it, 100 times 0.1, you would just get that $10 every month. And if you own 1,000 of it, or so on and so on, you would have more and more coming back every month. The goal, ultimately, if you have enough to invest, would be to own, a substantial amount of it, such that maybe you're getting, if you can own enough to get $1,000 a month off of it, then that's actually full-time income, right? That's all. That's practically not really full-time income, but a good amount of income, because you'd literally be just getting $1,000 a month for nothing, really just for having your money saved in here. And then you can use that for whatever you want to, really, or just keep saving it. A lot of people, what they also do is they keep reinvesting the money they get out of it, right? They keep reinvesting the money back into the same stock so that they can keep growing how many they own of it. And 10 cents a stock for a $12 stock is a pretty good ratio. As you remember before, I've always liked to look at the cost to payout ratio, right? The cost to payout ratio. So if we actually edit one of these just to see what the numbers would look like, let me see, the cost to payout ratio, what's the equation here? This is looking at B3 and G3. So I'm just going to edit this one right here. So let's say I was to change this to, the cost would be $12.25, right? And then the payout, so that would be G. This is going to be 0.1. And if we press enter, we get a really big number, which is, 122.5. And again, not exactly the best, but right now we're looking at a table which is full of quarterly paying dividend stocks. This is monthly. So now that you consider the fact that this is going to be happening over every month, it's actually not so bad at all, right? Not so bad at all. So that's kind of something you want to consider. It's always nice to look at the cost to payout ratios, which if you come to the actual monthly table, right? So let me actually use this one as a, let me use this empty one as, no, not that. What is it? Not average. Why can't it do it? Let me put the price in here and then we'll figure it out. Let me delete this row. So we're going to put over here the price is $12.25, and then the pay rate is going to be your 0.1, right? And then here we're going to do equals B10 over F10. No, B10 over, F10 actually, you're right. Yes, B10 over F10. Perfect, just like the rest of them. So 122.5. And you can see now, compared to the other cost to payout ratios, 122.5 is actually a pretty good number. The only other good one here, and again, most of these prices are not updated right now. These are when I made this Excel, so they're not up to date. But the only other ones that are actually looking really good, you want a number that's not too high. You don't want the ratio to be too big. You want the cost and payout to be as close to each other as possible. So ORC has always been the best one, and that's something that I own, and we might actually be talking about ORC today too. We will. But this one, Armour, is really good right now because of the amount of space it has left to grow. So it has a long time to go before it peaks again. And when it peaks, by the time it peaks, you would have been collecting monthly dividends, and when it peaks, you can sell it. You can get rid of it, or maybe wait for another downfall at some point and buy back in, right? So that's the point of it. Or you could just keep harvesting more and more of it and just hold it. If you end up having 1 million Armour residential stocks, then you're pretty much set at that point. But again, that's pretty far-fetched, and it takes time to build up to that. So that's Armour residential. Next one on our list is AGNC. So let's take a look at AGNC. AGNC. So you can see here, AGNC right now is at a 1746. If we look at the 5-year chart, then it's always averaged at around 17 something, right? It's got like low point. We can see a low point here at 1487, and right before the downfall is almost about to hit $20. So it looks like over the last year, it's pretty much made its return back to where it was. This is also a real estate stock in Maryland, And it's worth grabbing because what's happening after a pandemic is real estate is altering everywhere. You can see even here, according to Robinhood, it's 73% buy. Again, great stock, great growth stock. And let's look at the dividends over here. So if we go back to our Yahoo Finance and just put in AGNC, change this to, let me see. Oh, it is monthly right now. Monthly apply. And here we go, right? So this one pays 12 cents a stock per month. Again, this is probably going to have a worse ratio than the other one. So if we go back and put the information into our Excel, right, we'll just turn that into 0.12, and then the stock is 17.46. So you can see this ratio got bigger, but it's still a great stock because what we're also focusing on, we're not just focusing on dividend in this video. We're focusing also on the fact that this is going to grow, right? This is going to go up. In 1 year, it's gone up 40%, and in the next year, it might do another 40%. A lot of stocks have actually excelled what they were at before the downfall, right? So that's something you're looking at. That's something you're trying to grab into and really hope that it grows. And worst case scenario, if it doesn't grow, you're still going to have a good stock that's going to stay positive, probably grow a little bit, and keep paying you dividends. So that's AGNC. Next one is GROW, G-R-O-W, U.S. Global Investors. Now this one is an $8.13 investment services stock from Texas. Looking at the 5-year chart, you can see this is looking a little different from the others, right? So this guy, U.S. Global Investor, actually didn't really have much of a downfall in March 2020, right? So this guy did not really have much of a downfall in March 2020. In fact, even before that, it was always like a penny stock, right? $1 something, and now it's at $8.13. This guy has been doing some interesting stuff, right? Very unique kind of a stock, very much worth looking into. One of the ways you would look into it is you could just go onto FinViz and just type in GROW and see what they have to say about it. This website does a good job giving you all the news events that are occurring, so you can see what's been happening, right? You can see all the different things that are happening to it, and you could, if you're interested, you could look more into what they're doing and what's new with them. And you would get to see what's to come for them. Now, in terms of their dividend, if we go to our Yahoo tab right here, just type in GROW. Right, very interesting that its ticker symbol is GROW too, which is hopefully what it's going to be doing. Now, the dividend it pays is minuscule, very minuscule, right? But it's been doing it consistently. In fact, it's even more impressive when a stock is able to be paying dividends throughout the pandemic also. That's also very impressive. A lot of stocks had stopped paying dividends when the pandemic has started. Now, the dividends this guy pays is pretty small, but assuming that this is going to continue growing like it has over this year, which is a 560% gain, then you're actually looking forward to some good stuff here. Now I don't think that the next year would have another 500% gain. The reason it was 500% is because it literally started off at $1, which would have been the most wonderful time to grab it at. But it can still make some significant growth, and the dividend payouts can also be increasing as this growth keeps occurring. Another one I want to put on your radar, one of my personal favorites that I actually own as well, is Orchid Island Capital, ORC. Right now at $5.41, I picked up 1,000 of it at $5.88. Right, so I'm at a downfall for a little bit, so I'm down $470 almost, but I've been getting my dividends, so I'm going to be getting my actual first payment from them of $65 April 28, right, where they're paying me 0.065 cents per stock, right, so basically 6 cents a stock, right, and I look forward to grabbing more of it. And the reason I want to grab more of it, so this is another Floridian real estate stock. If you look at the 5-year charts, it had actually always been laddering downwards, right? It had been laddering downwards, but now it's looking like it's back at the same point where it was right before the March hit, right? So I want to hold as much of this as I can because I like the ratios here. So if we come back to looking at how much it's paying right now, right, we come back to Yahoo Finance, type in Orchid, and boom, turn it to monthly. So these guys are still paying the same thing, and they consistently have been throughout the pandemic as well, right? They had 0.055 at this point, growth to 0.065. So if we come back to here, this is the chart for this guy. Look at that payout ratio. Under 100, which is great. That's a wonderful payout ratio. At this point, right now, it's actually a better buy than it was when I bought it because it went down, right? So we changed the price to $5.41. And look at that now. So it went down by like 2 points right there. The cost to payout ratio of ORC is spectacular. That's spectacular. And this is the best one on this table over here as well from my list of shares that all pay monthly dividends, right? Monthly dividends. So I look forward to grabbing more of Orchid just because they do pay monthly dividends. And if I'm going to put my money anywhere, it's not going to be a savings account, which is going to pay me a 0.006% kind of drama thing. I don't need that. I don't need that, right? That's petty. The amount of interest banks pay for putting money in their savings accounts, it's just worthless. Putting money into Orchid Island Capital is already getting me back more than I would probably get for a whole year of living at a bank with $1,000. Here I had invested $5,410 and I'm getting back $65 or this is my first payment right now, but I'm going to keep getting it every month now. Because there's a period of how long you have to hold a share before you start getting payments. So I just bought it in February, so I didn't get anything in March. And then I held it all of March, and now here I am in April where I'm going to get my first dividend payment. And this is going to keep happening. So I'm going to get another 65 in May, June, and more depending on how many more stocks I keep buying, right? So Orchid Island Capital right there. Next one we have Ellington Financial, EFC. Ellington Financial over here is at 1763. Looking at the 5-year chart, it's starting to come back to where it was before. And before, it was pretty stable at that 16 to 18 range. So you're about to come back to the part where the stock was at right before the downfall. And chances are it could exceed. Over the year, of course, just like all other stocks post-pandemic, this guy has come back up 80%, right? The best time to buy stocks was, of course, and it always will be, of course, during a dip, which was our pandemic dip, right? Everything that dropped to shit at that point, people that were lucky enough to have money saved up and a job that's not going to go away due to the pandemic, were able to invest into all of these guys and grab it. So this is still at an 88% buy because this is a Connecticut real estate stock that is actually doing pretty well and most likely will continue to do well. Right, Ellington Financial. If we come back to our Yahoo Finance here, EFC, and make it monthly, and we can see another guy that pays 10 cents a stock. Right. So again, not much space left to grow. It might not grow past $18. It might grow past $18. But point is, it's a great stock to hold right now. It's going to continue paying you dividends, and it's another good spot to put your money into. Now, again, there are multiple stocks to put money into, right? But people have different preferences of what they really want to invest into. If you live in Connecticut or you do business in Connecticut, then this might actually be what you want to put your money into. So that's why I like sharing everything that I find, just in case this is something you're passionately into and you want to put money into it, you know. But Orchid Island Capital, of course, so far has been the best one. Another guy is Main Street Capital is a $42 stock. It's a little more on the heavier side. Investment services in Texas. On the 5-year stock, you can see it's starting to come back to, finally, where it was before the pandemic downfall. So basically, it's already there. During the pandemic, it was at a $30 range. And then starting from, looks like January 2021, it started making its return all the way back to where it used to be. And it will continue to grow because this is actually another stock that's doing great. On Yahoo Finance, we could see that the amount this is paying back is 20 cents a stock, right? 20 cents a stock. So that's pretty nice. That's very nice. Grab 1,000 of this, you'll be getting $205 every month. You know, and again, the more zeros you add to how many of this you purchase, the more you're going to get back as well. Just another great place to basically invest your money into, right? It's done its massive growth. It returned in 1 year. And it's going to continue growing, but not at this rate most likely, but it's going to continue growing. The last one I wanted to talk to you guys about is Dynex Capital, DX. Dynex Capital is about $20, 1987. It's a real estate stock in Virginia. Another one that analysts are saying is worth the buy. This guy is also done returning to where it was before its drop. Right? And it looks like it's actually surpassing it now, and it's going to keep growing. This is actually doing pretty well. Right? In the 1 year, it's done its massive return, and it's looking like it's going to hold that momentum for a little bit longer, and you can join in on that. As far as the dividends it pays, we can see right here that it's going to be giving you a good 13 cents per stock. Right? So these are all monthly dividend stocks that I wanted to introduce to you guys today. Pick your favorite, do what you want. My personal favorite was Orchid for great reason. It's cheap, it pays a good payout, and the stock price to dividend ratio is fantastic over here, right? Once again, coming back to my portfolio, if we look at the dividend stocks I've invested into, so that starts like right here, right? So we have IVR, ORC, and ICAGI, NLY, CIM. CIM has been the most successful for me so far because of the returns I've already gained on it. $1,000 back for basically the stock went up by $1, so I own 1,000 of it, so I gained back $1,000. Right, this is coming to a point where it might eventually hit where it was before the pandemic, and then I'll probably sell it. Right now, I'm waiting to look forward to collecting some of these dividends. I look forward to buying more ORC for the fact that it has the best cost to payout ratio. Now, that's the best cost to payout ratio for a monthly paying stock. If we look back at normal stocks, the CIM and NLY were the best cost to payout ratio, right? Less than 50. Best cost to payout ratio for quarterly paying stocks. And if I'll be honest, I think I'd like to hold on to all three of those, right? So CIM, NLY, and ORC are going to be the main dividend-paying stocks I'll probably end up retaining, right? One more I could talk about just to top it off in the end of this video is IVR. IVR is very interesting. So this is a stock that's very rarely heard of. It's a real estate stock in Georgia. It's actually in the 100 most popular, but very few people tend to actually make videos and talk about it. This is only a $3.85 stock. I picked it up at $4.18, so it's gone down a little, and I only grabbed 100 because I probably didn't have more to invest into it. I look forward to getting my $9 of dividends right now because I only own 100 of it, and I'm going to be getting that, I believe, in a quarterly manner, right? April, January, yep. So that's what's happening right here, right? And if you look at the 5-year trend for this guy, right, it had a massive fall. Massive fall. This one doesn't pay monthly dividends, so it's a bonus at the end of this video right now. But this pays quarterly dividends. However, I look forward to this $3.85 stock eventually making its return to this $17 range that it was always sitting at, right? Basically, it was over $10. And when I start seeing that news is looking like it's coming, I'm going to go ahead and move as much as I can by selling the other stocks that I've already profited back on and buying this guy, because this is going to be a massive return, right? More than 200% return when it jumps back from $3 to 15, 16, and possibly even 20. All right. So that's it for now. Keep enjoying those doggy newses, and let's hope that, just as Elon Musk is about to land on the moon, many of our stocks can as well. Thank you very much, guys.